the action plan when it comes to investing in real estate, and again, we just touched the tip of the iceberg today on this subject. Definitely, when the book is available, you're going to want to read through chapter 11 on this. Number one, use real estate to accelerate your journey to financial independence. Clarify your financial objectives and goals. What is it that you're trying to accomplish with that real estate? Utilize other people's money. That means borrow the money, use leverage. You have a valuable asset. Here's one area where leverage is a good thing. It's not considered bad debt as long as you know what you're doing. Borrow against the equity in your portfolio. What does that mean? Again, you bought a building for $1 million. 10 years from now, it's worth $2 million. You pay down your mortgage a little bit because principal and interest payments. Now you have about, let's say you have about $1.4 million in equity in that building after 10 years. Capital appreciation, paid down the principal. You have all that equity in it. The most successful real estate investors, you know what they do with that equity? They take out another loan, they borrow against that building, and now they use the loan proceeds as a down payment on their next building, and so on and so on and so on. And then you create a real estate portfolio that you're going to also have towards your retirement down the road. Utilize the phantom deduction called depreciation. Most misunderstood deduction out there. Huge benefit. Deduct it from your taxable income. Saves you money in taxes. It increases your after-tax rate of return. Use step-up in basis after you pass it on to create generational wealth and a legacy for your children and your grandchildren and so on. Make sure you choose the right legal entity for the real estate ownership. If you buy investment real estate and keep it in your own name, that could be a big mistake because you have no limited liability protection. You want to create an LLC, generally speaking, to hold the real estate. Your dental practice entity, maybe it's an S-Corp, it pays rent to that LLC. Very, very powerful. We go through that again in the book. Take full advantage of 1031 exchanges when selling investment property. We'll skip over the 1033. Utilize what's called PIGs, passive income generators. Not going to cover that today, but it is in the book. And lastly here, we have qualified opportunity zone funds. It's another valuable tool for deferring tax for capital gains, including utilizing it as part of your real estate sale, but the 1031 exchange blows the QOZ away in terms of that. Take advantage of every opportunity to access institutional grade deals through private real estate placements. What we're talking about there is DSTs, qualified opportunity zones. Consider investing in real estate investment trusts. Understand how the IRS classifies real estate investors. All the stuff I'm talking about here is included in the new book. Implement best practices, avoid pitfalls. Buying real estate is not always going to be a good investment unless you evaluate what it is you're buying. Just don't buy a property because it's there and you get emotional. It's got to make sense. Speak to your investment advisor, speak to your tax advisor. Buy the property only if it makes good sense, and build a professional support team as part of your real estate management team. Again, dental practice CPA, dental CFP, investment advisor, as well as a real estate broker that's going to help you. Utilize the Tax Smart Roadmap to Financial Independence to transform the tax code into your generational wealth code.